many unique metrics as we can here. I've got several lined up that I can run through. If there are any questions or clarifications you'd like for for Land Paul or anyone else who jumps on later, just let us know, and we'll kind of use this as kind of a review session for us staff members and you, Land Paul. So I'll just get started here with the social metrics dashboard. This would be kind of a nice home base that a lot of people don't know about, that allows you to explore social metrics in a much more advanced way than you can on Sandbase. We have, for example, simple social volume here, and this is just the beginning. You also have a nice smoothing bar that's a little more prevalent than the one you might see on Sandbase, and you'll see in just a moment it'll load. It's doing 2 years, so I'm going to actually get it down to, we'll do just 1 year instead. So now you see kind of a very smooth version of the social volume over the last year. You may have already seen this before, but I like to reference it a little more often than the Sandbase social volume because it provides a bit more of a detailed and granular look at social volume. We also then have unique social volume, which arguably is a little more valuable because of the fact that you are taking each social volume message and ignoring any duplicates. So if people are spamming buy Bitcoin, buy Bitcoin, buy Bitcoin, that will be eliminated and only be counted one time. So sort of similar to how token circulation factors in only unique tokens being moved as opposed to just, more of a volume type of metric, which is counting all of the tokens being moved, even if it's wash trading, moving over and over again. Unique social volume works similarly, where we're only talking about one message that is able to repeat at a time. Any further repeats just simply don't factor into this equation. Now, spam index is a really cool one. This one tells us the amount of spam-free conversations going on. And generally, as social volume goes down, this goes up slightly because it allows more bots to be prevalent. So I actually think it's a good thing when this spam index is down, and you can see that tends to be when the prices go up, at least over the past year. It's not the most alpha-centric metric, but it can provide some good details about how much bot messages are taking over versus humans. Relative social dominance. This compares the social volume of the biggest crypto projects with the selected projects. So it's kind of a 100% graph, which will allow you to look at, what portion of Bitcoin is making up the entire, at least 7 different projects that we're comparing to, basically the top 7 market cap assets we all have in one stacked chart, and you can see when they're flowing. So for example, Binance Coin is starting to get increased attention right now. You can see that these are starting to go up a little bit. And Bitcoin also has kind of increased a lot. Meanwhile, Ethereum's social dominance has decreased quite a bit. Twitter follower growth. I was going to show it on Sandbase, but I'll show it here as well. It basically shows just how active, as you would expect, the Twitter account for Bitcoin is looking at any given time. And we can, of course, change this to any other asset and look at much smaller ones. Look at Cardano, look at, a smooth love potion if we wanted, anything out there. And it'll tell us exactly how many per day they're bringing on and the overall trend, just the overall growth, which sometimes you can see is growing rapidly, sometimes it's growing a bit more stagnantly, but it can be very valuable. This is one of my favorites on this dashboard. This is simply the positive versus negative commentary. And you can see when the positive commentary is really starting to get high, that is when tops happen. When the negatives start to get high, that is when bottoms happen. So you can see it's much easier to tell on the positive side because there's like this huge peak, and then prices drop, huge peak again, prices drop, huge peak again here, prices drop a lot. Certainly not going to always be that reliable, but to supplement something like weighted sentiment, which uses the ratio of positive versus negative sentiment, it can be very valuable. And you can also combine that with like Twitter followers and overall sentiment related, like positive versus negative, or profit versus loss, for example, can be interesting. MBRV, these are the kind of things that correlate quite well with positive versus negative sentiment, because you'll be able to tell when people are down significantly in a 30-day span. You'll start to see the negative sentiment rise. When they're up, you'll start to see the positive sentiment rise. But when this gap closes, that's generally a good sign, because it means that people are more prone to not being involved in crypto. They feel the crypto's dead, and that's when you see those big pops. The sentiment balance is simply combining the positive and negative sentiment metrics together. So it's simply subtracting this green line from the red line and showing the difference at any given time. So you can see when there's this huge gap lined up here around the first and second week of December, that's when you have this huge rise. So it's basically just a gap measurement. If you don't want to do the calculation between the two, then this sentiment balance chart can be perfect. Weighted social sentiment, we've talked about this many times. It's simply the balance right here multiplied by the unique social volume. So how often things are being discussed. And, with everything max and smooth, there's going to be a little bit of a lag on this. I could always tone it down, but I don't want to wait for the delay. You'll be able to tell when things are getting very toppy. And sometimes the smoothing being up high can be very helpful to see what the longer term trend is. So as of right now, no surprise to see that it's been negative for quite some time now, going back to mid-May. And until that changes, that means we have a slight advantage as traders when we are staying hodled or buying more during these dips, as long as the crowd is doubting Bitcoin so much. Looks like Landfall left. There he is. All right, next I want to show the top transactions table. So what we're looking at here is all of the highest transactions for Bitcoin over the past 30 days. And I'm going to sort by value so we can actually see the largest to, not the smallest, but smaller, but still able to qualify for top transactions table, high-end values here. And you can actually look at any specific transaction, open up the to table here, and you can see over time exactly what the address has been doing. It can be incredibly valuable. This is the last year. And if you think that one address may have a bit of an impact on the markets, you can look at when they're accumulating, when they're dropping. Sometimes it can be deceptive because there are multiple addresses owned by the same people, and they're transacting between the 2 or 3 or 4 addresses they have. But overall, if you come across an address that correlates very, very closely to Bitcoin's price, you may have a tremendous advantage when it comes to your trading, when you can follow what they're doing and leading the price. You can also look at the transaction hash, so you can see in the blockchain.com Explorer every single transaction that's being made by this address over time. So really cool there. I think the top transactions table is highly underutilized right now. And as we find more and more alpha for it, or identify some specific addresses, whether it's for Bitcoin or a smaller token out there, this can definitely become more and more popular. Next up is the relatively recent metric that I've been showing a little bit on This Week in Crypto, but wanted to quickly review. This is the weekly look at the ratio of daily on-chain transaction volume and profit to loss. I'm going to switch this back to Bitcoin for a minute. And as you would expect, when you see high bars here, that is when there's a lot of profit taking happening. When you see low bars, that means people are trading out of the asset at a loss. And just like MVRV, you want to see mostly low bars, because high bars are indicating that there's legitimate profit being taken, and that is when tops tend to form. It's going to be kind of like a confidence level where the higher these bars are, the more likely a correction tends to happen. You can see the highest one for Ethereum happened about a week before the all-time high, and then that huge drop-off happened. You can see here when they were trying to rebound, more profit taking was happening, and on the tail end of that week, boom, we have another huge drop. Even right here, very classic top that occurred right in the end of March, and a huge downfall right afterwards. This is one of probably the best midterm swing trade metrics out there right now. I don't know if the bottoms are quite as reliable as the tops. I mean, you can clearly see there's still plenty of good examples of when the ratio was in the negative and there were more loss transactions being taken than profit transactions. The prices did rise pretty immediately. This one more of a shorter term one. This one, at least, at the conclusion of it, you saw that the hemorrhaging of Bitcoin stopped and started to rise a little bit. So there is some alpha there, but I would put a little more credence in the high bars indicating tops as opposed to the low bars indicating bottoms. Next up, stock to flow ratio, and this one's an interesting one. It's especially interesting because we're seeing a huge spike right now. And I like this answer that Cointelegraph gives in terms of what its value is. They say that the stock to flow model predicts value changes in a more straightforward manner. It compares an asset's current stock to the rate of new production, or how much is produced in a year. A higher ratio suggests greater scarcity, which generally leads to a higher price. So overall, you want to see this model going up over time. And if I'm going to go back to the last 5 years or so, you can clearly see that the stock to flow model is increasing. And then just as of this past week, we're seeing this huge spike. And who knows what this means? It could just be a reaction to the price dropping more, or it could be the fact that more coins are being generated at a scarce level. And that can lead to a price rise as well. So overall, this rise here is good. And, Gary and Maxim, feel free to jump in on some of these metrics as well, especially stock to flow, because I'm moderately familiar with it. I know there's a famous Twitter account that a lot of people follow to get information about the stock to flow model. But you guys have any thoughts yourselves about how this model works and what kind of value we can derive from it?
I don't think there is any value left.
Really? You think stock to flow is kind of a novelty?
Since it became too popular and everyone was talking about a few years ago or a year ago, it's decided, okay, it's not working. And I remember we were writing an article about half a year ago. At that time it was controversial. Not everyone liked it. And our marketing team asked me to write it more politely.
Mm-hmm.
But now even Vatelix says
it's
my thing was always it's too rational, and markets are so irrational that you cannot squeeze it into so rational model. The idea behind is okay, but just one parameter. Markets are so much more. It's about macroeconomics, and it's about perception if Bitcoin or alternative chains are about to fulfill the crypto missions. So much more, and you just use it to, okay, this is a limited supply and it should grow as it goes. No, it doesn't work.
Yeah.
I always thought about that it doesn't work, and I still think. Now I have confirmation from my daily. But it's nice to watch. I would never try to trade on it.
Yeah, I would agree that it has more of a novelty aspect than something that is legitimately going to provide alpha. I've noticed that, when prices are up a lot, people start becoming interested and looking for a little bit of confirmation bias. when it comes to stock to flow and say, oh yeah, stock to flow's been up, no wonder price is going up. But if prices are down, especially like they have been for the last 7 months or so, that's when everyone's like, oh, I knew stock to flow didn't make any sense and it has no value whatsoever. And I tend to be in that camp as well. It's why it's not really referenced in any of the tweets we put out. But, regardless, we do have it on our platform if you ever do want to check it out and see what's going on in terms of the scarcity and how, major spikes like this might indicate at least something. So who knows? Who knows if this spike is temporary and immediately goes back down? But it's at least interesting to see that it spiked to its highest level in more or less 5 years. All right, next up, so this is more of a custom one that I made myself about a year ago. It's the top 10 non-exchange whale addresses and their holdings divided by the top 10 exchange whale holdings over periods of time. And generally when we see the metric getting high, it's at least indicative that more assets are being moved into huge cold wallets as opposed to huge wallets that are on exchanges. And it's not going to have the most value, alpha in the world, I should say. But it can at least be a validator to coincide with supply and exchanges for you to look at. I can actually stack it with supply and exchanges here, put them together, and you'll notice that sometimes it coincides, sometimes it doesn't. But more or less, these top 10 from each side can have a dramatic impact on the overall supply and exchanges. So you can see as the top 10 non-exchange whales are rising compared to the top 10 exchange whales, the supply and exchanges is dropping, and that makes perfect sense. You'll notice right here it started to rise and just continued to rise, and eventually we saw this big drop off in the non-exchange whales, giving more to the top 10 exchange whales, maybe not directly, but the proportion held off of exchanges was really going down rapidly in terms of these whale addresses. And it's continued to go down, and it's pretty much down to a 6-month low right now, which is interesting because it's coinciding with, of course, Ethereum's supply and exchanges being up to 13.7%, which is also about a 6-month high or so. And we'd rather see this red line stay down and the top 10 non-exchange whales continue to increase their hold over the top 10 exchange whales. That's not the case now, and can certainly be a lending explanation for why prices have dropped so much. You can see a small fraction of time, about 2 days, between, I guess 1 day, between this ratio dropping significantly and the price going down. And same here, you can see that the ratio went up here and then prices continued to rise. Same here, the ratio went up, prices rose. So there is some argument that this has some good alpha. I certainly like it. Even back here in early January, right after a big price drop, you see a rise in the top 10 non-exchange whales versus top 10 exchange whales. And there's kind of a rebound here. And yes, there was a drop right after, but overall, if you try to look at this as more of a macro alpha indicator instead of something to look at on a day-to-day basis, you might find some success in adding it to your strategy. So we touched on Twitter followers. I just wanted to point out Link because it's a very popular one on Twitter. Whenever we post about it, there seems to be hundreds of engagements and people coming out of the woodwork to give their opinion about what our analysis is on Link. And you can see how during the bull run, it really, really grew fast. And even after the big drop in May, it's been able to rise pretty swiftly, but it is tapering off now. As of the past 2.5 months, it's really slowed. And this is indicative of most of crypto right now, where there are less and less participants jumping into new Twitter accounts and caring about the price fluctuations and where crypto markets currently stand. Now, I'm not too familiar with velocity. I was going to reference the Santiment Academy on this one, but Maxim, if you want to maybe briefly go over velocity, I think it might be valuable not just for the community but for me as well. Do you have
mostly? Yeah, velocity I like about using for stable coins and to see the periods of activity in kind of depression. Yeah, both DAI and USDT. Actually, USDC maybe too. You need to apply price of Bitcoin.
Got it. So I'm going to go to DAI, and then I'm going to add BTC price. All right, so we've got our price here in red. We'll take off DAI's price. So now we've just got the DAI velocity and Bitcoin's price.
So, and increase generally low level velocity means we went into depression. It's a kind of, you can consider by high level of velocity, excitement of the market, this kind of things, because people will find the usage for stable coins, they go leverage, and they incorporate it in different protocols. And sometimes high spikes, you can see, I don't remember top of my head, is it only for DAI or for, I think for Theta 2, it's when also realization of the crowd when the trend goes down. So it is valuable to understand where in market cycles we are for stablecoins. If you take it for stablecoins, which are widely used nowadays, different lending pools, so it's quite valuable. DAI and USDT. USDT, because of its wide usage.
It's like interesting.
It's like there are two usages. One is if you take the economy, normal economy, then you would assume, okay, when the money is circulating and people are not collecting, so it's kind of everything is growing. So people think, okay, cool, I need to buy stuff because maybe price will increase, or I invest money because I can get more. The moment depression came or is coming, you start holding your money. I mean, a normal classical economy, the inflation is coming because, okay, why should I spend my money if the price will become cheaper? So this one applies, and it can be read from the charts. And the second one, because of nature of stable coins in crypto and how they move, velocity increase also in the middle of the trend. Spikes, people see or realize where the market goes, and there is different ways going in or out of stable coins. So it adds additional layer on the classic finance, which you would expect. And generally, velocity of stable coins in crypto is a very valuable source which can show you or reveal some important stages in the market.
Yeah, thanks, Max. It definitely looks like there's a few spikes that have happened over the past couple of years, especially here in early February of 2021, and then more recently at the very end of 2021. One coincided with a big rise. Yeah, go ahead.
And then take USDT.
All layer them together.
So we need to remove this super big spike, otherwise in the website, otherwise you cannot see anything.
Do the last 3 months.
No, take longer just to remove this big spike. On the slide on down.
Like that?
Yeah. Okay, whatever. It's also good. So in Theta it's more noisy, yeah? In Theta it's more noisy because of it's used not purely by decentralized protocols, which reflect the usage of decentralized protocols reflect till now. Maybe it will change in the future. The growth, stabilization, stagnation, and fall or depression of crypto economy. Theta is a bit different because it's used, I don't know, for arbitrage, for so many things, different chains. And yeah, probably I would stick initially with DAI with analysis, but probably with USDT you can find something too. Every time when it goes very low in circulation, it would probably come. You would expect there is something interesting might be coming along the lines.
Yeah, thank you.
Maybe not every time, but many times.
Right. It's certainly fascinating to be able to look at how the velocity of stablecoins can impact the price of Bitcoin, but it certainly makes sense because those are what really make the trading pairs and the order books flow the way they do. So I think this is a good one that I can personally add to my collection as well as our community. All right, next up, age consumed. So this isn't one that we've been able to talk about often because it has not had a lot of significant occurrences and spikes in its value compared to a lot of the other metrics out there. But we do see our share of bunches from time to time, especially here just about 2 weeks ago when there was that big price drop from at least on the Ethereum side. Let me switch to Bitcoin really quick. So yeah, we had the big price drop here going from 30K all the way down to eventually 17K-ish, 17.8, 17.9. And right before that, you can see a lot of these age-consumed spikes bundling up a little bit. And that means that there's some dormant tokens moving. It's looking at the Santiment Academy. If we go to age consumed, try that one more time. Age consumed. I'm just looking for the simple definition. Try this. There we go. So the token age consumed metric shows the amount of tokens changing addresses on a certain date multiplied by the time since they last moved. Spikes on the graph signal a large amount of tokens moving after being idle for an extended period of time. A potential use case for this metric is identifying when big market players exit the project post ICO. So it can be both a top indicator and a bottom indicator. I've seen more uses for it being a top indicator. If we look at a smaller asset, for example, let's see if there's been anything on Terra Classic, especially prior to the drop. May not show. I think it's because it's a non-ERC20. So let's try something else. How about Shiba? So we see one massive age consumed spike that happened on February 28th. And this was about, looks like a day before a big local top here, where prices then dropped about 21% there over the next couple of weeks. So age consumed can be very valuable at identifying when a large amount of dormant tokens are getting out. We can see right here as well, right at the tail end of this huge surge that many remember from early November. This can be a time when you want to be weary of staying in an asset when you're seeing a big age consumed spike like this. Now, yes, this one dwarfs it, and this one also occurred right before a big drop. But relatively speaking, even if we were to zoom in just from like October until now, you'll start to see the spikes look a lot bigger and they can be more noticeable. You'll also notice that there's an argument for it being a local bottom indicator, where if prices are plummeting a lot and then a lot of dormant Shiba or another token start moving, that can be a sign that some big players are moving their tokens for the purpose of accumulating more and putting them in a new address somewhere or an alternate address. Either way, this sign of dormancy starting to dissipate is usually a sign of a price direction switch coming, sort of similar to like a major social volume or social dominance spike indicating that the crowd is becoming very interested. This is more the big players behind the scenes becoming very interested in changing price direction. Anything you want to add to age consumed, Maxim?
Yeah, one of the main usage is correct is volatility marker.
Yes.
And also, I remember the time, and I see it from time to time, when imagine we built a bottom a week ago, yeah? It was actually almost 2 weeks ago. Oh, when we start growing, I don't say that we built, if we made the bottom or not. In a growing market, after some time, you will see very intense, or you want to see very intense age-consumed spikes. Ideally, not on several tokens. What would that mean? It would mean that we had in the previous time enough bearish pain for those who was now slightly in profit or had enough pain, looking for an exit or start moving their tokens. Yeah, and it's a kind of confirmation of trend reversal. So it's not only about volatility markets exactly time when it happens, it's also a kind of one of the indicators we use to identify wall of worry. And if you see it, I saw it in last year and also in 20 after COVID, that's actually quite a good buy signal. Yeah. So this is two usages I do like to observe. Yeah. And it's on the major coins, it's more like you said, the volatility. And what I said, you just pull up some 5 or 10 projects. You will see it. It's like almost not at the same time, but there is some literally like a wall of worry rising up suddenly. Different projects which are not connected to each other. So it's a shared emotion or feeling among token holders for different projects. Yeah. Most likely, when we notice it, we will share it. But keep in mind, if you will, you will see it by yourself. It's age consumed is a strong one.
Mm-hmm. Yeah, I think volatility marker really sums it up well. It means that you're very likely to see some added chaos to the price movement of your asset that you're following when a bunch of dormant tokens suddenly become active and wake up. Yeah, because it simply means there's more tokens suddenly being added to the mix of circulating tokens. So it makes sense.
Exactly. And they reflect already existing quite strong impact on token holders. So they're feeling something. Otherwise, they would not be urged to move it. And when someone feels something, and a big group of people share this feeling, something is coming. Market is often just reverse or intensify its movement, but there will be more things coming.
Right. All right, very good on age consumed. Let's move on to meme coin age, and I want to pull up the definition for this one as well. So we've got two different meme coin metrics, and we'll start with the traditional meme coin age, which was used first before we jump onto the other one. So meme coin age is the average age of altcoins and tokens on the blockchain. So very simply, this metric here is measuring how long each coin has been sitting in its respective address. When the line is going up, which it typically does, if there isn't a lot of dormant movement, that means there is a lot of stagnancy on the network and coins are sitting and metaphorically growing cobwebs, right? Kind of just sitting and waiting to be moved somewhere. And what really spurns markets to go up is movement and utility and cycling of tokens going from one address to another. So when they're sitting stale in one address, it's indicative of disinterest and kind of non-circulation that can lead to price drops or periods of very flat price movement. So right now, as you would expect, there's been mostly nothing but rising going on. But if I were to go back to 2016 here, suddenly we've got a much more interesting picture. And well, I'll get to this pink line in a moment. But these minor drops in meme coin age very often coincide with price bottoms. You can see here the downtrend discontinued pretty much right at the point of this drop here. Same with right here, going back to the big bull run of 2017. You can go all the way back to early May or even late April when the mean coin age line started to go down. That's when the bull market really started. And you can see that it was already starting to go down in mid-December. The mean coin age line started to flatten out in late January. That's where I like the pink line more, and I'll touch on that in just a moment. But when you start to see a rise, that's a sign, more of a validator than anything, that bull run may have come to an end for now, because the dormancy or lack of dormancy that was happening during the bull run is coming to an end, and we are settling into another dormant period. And yes, we can still see prices go up, without meme coin age needing to drop. But when we do see another drop, like we did in October 2020, look what happened to Bitcoin. Suddenly, the players who were kind of watching all of this chopping action from mid 2019 all the way up to the beginning of Q4 2020, they started to move their dormant tokens just a little bit here, and that made a dramatic difference on the price. Now, it's certainly not the reason that prices went up so much, but they certainly contributed to it, and there was likely some FOMO at play, because you can see that it was already happening as prices had gone on what looks like about 153% rise during those 7 months or so. But like I said, it's more of a validator than anything. And that brings us to the other one. So I'll leave the red line on. But if we look at just the pink one now, it's called mean dollar invested age. We're going to go back to the Santiment Academy really quick so I can give the official definition. And that would be, mean dollar invested age is the average age of all coins and tokens on the blockchain weighted by the purchase price. So instead of just looking at going way back here, instead of just looking at the average age, you're looking at the average age in terms of purchase price, in terms of the dollar investment in Bitcoin. So it's cutting through the noise of wherever Bitcoin's price is and looking at how the dollar age factored in to the coins that have been sitting for a long period of time or a short period of time, what have you, combining that all together. And you can see much more dramatic divots and rises in the line as a result. Especially going back to early 2017, unlike meme coin age, which was kind of staying flat for the first half of 2017, mean dollar invested age was absolutely dropping off a cliff here, going from an average age of 413 at the end of 2016 to just 69 days at the end of 2017. And during that time, obviously, if we go from here to here, hold down shift, just a cool little 1,340% rise in Bitcoin during that stretch. And then as soon, literally like on the week or so, that the mean coin dollar invested age line stopped dropping, look at how the local top formed, and then a reversal happened. And then as the reversal happened, the coins started to go through a flattening period for about 2-3 weeks or so, and then immediately started to rise. And during this rise, the price actually went down for Bitcoin about 60%, while the mean dollar invested age line went up 281 days during this stretch. And then finally here on early May of 2019, we saw another drop. And during this drop stretch, Bitcoin's price went up 100%. So it doubled during just this time here, spanning about 3 months or so. And rinse and repeat, it started to go up again. price started to go down, chop a little bit, and then eventually, as I said, the big mean dollar invested age drop here coincided with the huge bull run that we experienced from, pretty much mid 2020 all the way up, I guess you can argue, to the eventual all-time high that occurred in early to mid-November of 2021. So in terms of validators, looking at both of these together can be very interesting. I've found that the mean coin age line tends to lag behind price a little bit more, whereas mean dollar invested age, if you're seeing like a flattening period during like an extreme price movement like we saw back here in April 2021 or going all the way back to late 2017, those are indications that you may be about to see a price reversal. So watch for flattening periods, which we're not seeing at all really right now. Even if I zoom in to, the last year or so, it's pretty much been nothing but rising, indicating more and more dormant token movement is happening. But as soon as we see just a little bit of a flattening, that can be a good sign that it's justified to start dipping your toes in a little bit more if you're planning on putting some of your dry powder to work and adding onto your Bitcoin or any other coin's position. And it can be much more dramatic too. Like if we look at a smaller cap asset, let's say Uniswap, that's a good ERC20 we can check out. Look at these big sharp drops here. And I guarantee you there were some larger ones if we go back in time a little bit to 2017 or so. So like this one, for example, look at how both mean coin age and mean dollar invested age really dropped off a ton in March of 2021. And we had, just from that small drop...
Check Cardano, that's more interesting.
Sure, yeah, let's look at Cardano.
I always check when I demonstrated Bitcoin Ethereum Cardano. They show so clear. I call it, and I use it as redistribution cycles. When distribution is over, you're in dangerous territory. Yeah, and
Great call, Max. I think this one is a perfect illustration. If we just look, let's go back to the first initial drop here in mid-February of 2020 and go until the flattening period starts in March 2021. So just about a year here. Price went up 2,291%, and the mean dollar invested age dropped 446 days, going from about 485 all the way down to just 42 days. So 41 days. The average age of coins sitting in one wallet on the invested dollar age side was 41, which is crazy. So like 90% below where it was in 2020. And obviously, Cardano went on quite a run just during that time. And even during the flattening period, I guess you can see a small rise in the dollar invested age right here, which indicated we might start to see some dormancy. The price did drop. And then when it flattened again, just on this very short drop here that lasted about 3 weeks, that's when we saw its most massive rise of all time relative to the time spent rising. So like on a per day basis, we went up 145% in just about a month and a half. So that's how dramatic just these small drops can be in terms of price rises. And it's always very interesting. We have a Sandsheets model that I made about a year ago for mean dollar invested age. I won't show it on this call because I want to tidy it up a bit, but it's something I want to reintroduce to the community and try to provide something that our pro members can get use out of, because, not just, instead of looking at these one at a time, if you have like the mean dollar invested age for 30 different assets all at once, and you put them on like a percentage basis scale instead of like a real number scale, because they're all going to be dramatically different when you're comparing assets, you can quickly find where the drops are happening and how that is about to impact the markets. All right, moving on, a couple more metrics here, and then we'll have time for just a few questions, and Maxim, if he wants to add a few himself, we can do that. This is the BitMEX open interest and BitMEX funding rate metrics. So open interest is the actual total amount of perpetual contract funding rates that are currently running on BitMEX. And the funding rate is, of course, the amount of longs paying, the ratio of longs paying shorts or shorts paying longs, dependent on whether it's positive or negative at any given time. You can see, as of late, these are all 8 hours. I think that's actually fine to look at, even though it's very noisy. You can see the one big drop here that happened in May. This was a reaction to the massive drop after the second of the 3 FOMC announcements, rising the interest rates here in the US. And then right after, we saw a bit of a price bounce. It was mostly choppy and flat, but really the times you want to stay away are when you're in an extreme positive, which we haven't seen in a very long time. But if we look at something a little more interesting, like, let's go, I think Matic could be interesting for the open interest and funding rate, but they're not on BitMEX, so we're going to skip that. Let's try Solana. No, Solana isn't on there either. Polkadot. Keep trying. XRP should be on there. There we go. So it doesn't have open interest, unfortunately, but you do see the funding rate being extremely high. And when the funding rate gets high, that's when you typically see a little bit of a drop happening. And when it's low, like this, when we saw this divot, look at how this essentially marked a bottom and prices skyrocketed. It won't always be this clear, mind you, but especially if the dominant trend for a long period of time is nothing but positive funding rates and suddenly you see a drop, that could be a pretty good signal that there could be some short liquidations happening to push the funding rate back to the same trend that we've been seeing for a long period of time. And going back to open interest, let's try Litecoin or something. No. Wow, I'm surprised there's no open interest data. We'll stick to just Bitcoin and Ethereum then. Maybe we only have open interest for Bitcoin. I guess I was mistaken thinking there were more. But regardless, you can see how the open interest over time has really gone down a lot. And it's obviously a sign of disinterest overall from the community, but you'll see how it kind of follows along with price. When prices are up, more people are interested in setting up, leveraged longs or leveraged shorts. When it's down, everyone's kind of just sitting and waiting for the price to be more favorable so they can feel more comfortable with doing more gambly types of behaviors. And what was interesting between the then all-time high in April 2021 and the true all-time high that happened in early to mid-November, there was a lot more open interest in April than there was in November. And my theory is that there can be a lot higher pumps when there is less open interest that is compressing the price. So there was less longing going on here. Obviously, if we look at all the longing that was happening in April versus the much less longing happening, just kind of these small spikes compared to these huge ones, that was an indication that there were not nearly as many people expecting for prices to pump all the way up to above 68K back in November as there were in April, when everyone was just going nuts after a year, ever since Black Thursday of 2020, the price was just doing nothing but pumping. So everyone was in FOMO mode here. And yes, there was still a dramatic drop here, but this one was even more dramatic, as we can see going all the way to right now. But less open interest means there's usually less resistance. If there's a lot of longing happening, it can continue to surge until the open interest begins to rise, or there can just be a series of other reasons why the price eventually drops. In this case, I know that whales were a big contributor to prices dropping because they began taking profit in between this local top and this local top right around here. But regardless, the open interest was much less this time around, and I think that allowed the price to go up quicker without as much resistance and choppiness as we eventually saw this all-time high get to in April. And yeah, I'd say that pretty much wraps up the metrics I wanted to show, and we've got 5 to 7 minutes left to go over any questions you guys may have, or Maxim, if you want to show off like the MakerDAO dashboards or anything like that, I'd love to go through them with you.
We can ask first if there are any questions.
Of course. Yeah, we've got a couple community members in here, Dennis and Land Paul. If you guys want to unmute your mic or write anything in the chat to let us know of anything you want clarified, we're more than happy to help.
Ryan, do you have the recording of this session?
We will.
Yeah. Minutes.
Yeah, of course. We expected that there wouldn't be a ton of people on this Discord, but what we're going to do is drop the link unlisted on YouTube. Our good friend Gary here is recording the whole thing, and we will drop the link for the Sandbase Pro community in the channel within 24 hours or so, I'd say.
Yeah, fine. Thank you. Thank you, Brian.
Of course. Yeah, thanks for jumping in.
You were sharing this mean dollar invested age metric, right?
Oh yeah, we touched on it a couple slides ago.
Yeah. I just want to share my understanding. So when you combine other metrics such as the whale transaction count and the age consumed, so during the bull run, the mean dollar invested age and the mean coin age starts declining, as well as the whale transaction count starts spiking and the age consumed starts spiking. So one way to understand is that the whales are exiting, and they're selling their hot potatoes to the retailers, and the dormant coins are moving back. So everything, if we combine all these metrics, it's like we are solving a puzzle.
That's really interesting.
You can add age consumed also.
Yeah, I mean, why not? We can add age consumed in here too. I'm not sure if we have it for Cardano or not. Nice, we do. So what you're saying is when the mean dollar invested age line is dropping and the whale transactions are rising, that's a recipe for a bull run, as we can clearly see here. But if the mean dollar invested age is rising as whale transactions are heating up, like we saw here, that can be a sign of an upcoming price drop. Do I have that correct?
Yeah, correct.
Yeah, I think that's a really good analysis, and I actually have not combined these two together before. I wonder if there could actually be a way to do like a combined metric type of...
Clearly seen this behavior we can very clearly see in Bitcoin and Ethereum. Maybe Bitcoin much better.
Yeah, I think this is really cool, especially with age consumed in there too, because it makes sense. You're not going to see a big drop in mean dollar invested age unless some major players and $100,000 plus transactions are occurring to contribute to the dormant line coming down so dramatically. But you can clearly see, I mean, just as you mentioned, as the mean dollar invested age dropped here and whale transactions heated up, it contributed to a huge rise. I guess the question is, how could we tell the local top here? Because it doesn't look like mean dollar invested age spiked very much. Whale transactions were staying high, and the mean dollar invested age line was starting to taper off. Yeah.
And you can just turn on the indicators such as the 30-day trend line for both whale transaction count and age consumed, so that you can start seeing the declining nature of both the metrics.
So if I add 30-day moving averages to both, whale transaction count would be here in blue, and mean dollar invested age is orange. So as the 30-day trend is starting to rise and this trend is falling, I see what you're saying. Yeah, there's going to be a trailing aspect to it when you look at a 30-day indicator, but for sure there's some value here. I see, especially as they cross, that can be a sign of a lot of volatility happening for sure. Yeah, very cool. Thanks for pointing this out.
Thanks, Brian.
Yeah. Any other questions or clarifications or just insights? Maxim, do you want to take a moment to look at any sort of metrics that you want to talk about?
It's a quite long topic. If we want to cover debt creation, repayment, and destruction, maybe we need to make it as a separate stream. Yeah. It's very valuable, in my opinion. We use it. I use it very often.
Why don't we do?
If this alone, if we master it, or especially I'm looking forward to extend it with the data and we try to pull it in from other, I have a feeling it can improve a lot of your understanding of the market structure. Mm-hmm. So I would take it separately. Also, actually, we need to invite Maxim Kachuk. We both use it very frequently, and maybe we can complement each other. Yep.
I'm saving this template, by the way, for Dennis. I think it was a really good one. And yeah, Maxim, I agree. Why don't we plan on having Maxim Kachuk come and join us, and we can do a separate webinar, or he could even join us for like a special 15 to 30 minute segment on a This Week in Crypto call, and we can introduce everybody to it, whatever the preference is.
We can keep it to Discord. It's fine.
Okay. And we'll do it just for the Sandbase Pro members?
Yeah. Anyways, I think it's available to Sandbase Pro members. And it's a really advanced indicators. Even though after you understood it, it becomes relatively straightforward, but there is some work needed to go through initial challenges of behavior analysis or contradiction analysis.
Mm-hmm.
But it's good to have it in separate.
Yeah, I'm looking forward to checking it out. And I hope that a lot of these metrics we went over today, guys, was helpful to you, whether you're watching it live or you're watching the recording on YouTube right now. Let us know what you think, either in the comments or on our Discord, wherever you'd like to chat with us. We are very interested in your feedback. These are obviously very niche metrics compared to the usual utility and MVRV type of metrics and whale behavior metrics we normally go over. So there can be a lot to them. And just like Dennis just taught me something about, combining a few of these metrics together, there may be some insights you've discovered through your exploration of some of our on-chain and social metrics to find alpha over the time you've been on Santiment. So we look forward to your thoughts, and on behalf of Maxim and Gary and Alexi, who I saw on the channel as well, take care of yourselves, and thanks so much for tuning in to check out this special webinar.
Yep.
All right, folks.
Thank you, Brian. Yeah.
Thanks, everybody.
See you on Discord.
Talk soon. Bye.